Okay.
Hello, everybody. Welcome to episode 3, SoFi Weekly. Q3 earnings, November 2nd.
Lending Club, which is a big competitor to us, is showing us a little bit of worrisome sides in terms of guidance. Their originations are slowing down for Q4, but they're also saying that it's because of macro headwinds and they just really don't want to be putting a lot of money out in an environment like this, but they'll have to see. SoFi has gone above and beyond what the normal market has said every single quarter.
We saw obviously Meta, Amazon, Google tank. Apple's the only one that survived this week. Do you think even if they do well, they're not going to do phenomenal probably?
If you look at the past couple of quarters, SoFi has gone up 30% by beating earnings the next day. Amazing spike into the air. And then the following weeks drop to new lows. I don't worry about if Apple or Amazon or any of these companies are pulling us down. They're not in our sector. Digital banking is going to be a forward-looking market, as well as their tech platform for API-centric issuer processing for payment networks.
SoFi has a history of being very conservative in terms of their numbers. And the flip side of that is that they raise guidance consistently. I think for the last 3 quarters reportings, they've raised guidance. I don't see that trend changing for any major reason. There's a lot of companies that do well, but the stock doesn't respond. SoFi might fade away over the next couple of weeks after earnings, but on the earnings day, they have big runs because the stock has a really high short interest as well. Whenever SoFi responds great numbers and they raise their guidance, I just think it's further reminder of the company still executing on that mission. And a lot of that is experience from the management team who sets expectations conservatively to allow themselves ample margin of safety to beat those estimates. So I'm bullish going into the earnings. It's going to be interesting to see how this time shift is going to affect them as well. I think it's net going to end up being a positive. With regards to the big tech, I mean, big tech earnings are completed. And so I think the market has an opportunity to digest the big tech earnings.
There are a couple really interesting things that I'm going to be looking out for. I want to see credit card numbers. That number is going to be really, really interesting. Where SoFi sort of messed up last quarter was in credit cards. The numbers came in way lower than what I was expecting. Across the board, it was a record-shattering amount of new credit cards that were signed up across the board for all banks, everyone. Visa, MasterCard, they had amazing quarters. SoFi didn't even have their best quarter. It was like the largest amount of signups in credit card history, but yet SoFi, it wasn't even their highest quarter for credit cards. There's another product that SoFi has that no one really talks about, SoFi at Work, company benefits programs for both retirement accounts and benefits packages, insurance, everything like this. Our numbers for that are growing like crazy, and that's also what I'm really, really excited for. So we have a partnership with Pagaya, which we actually refer loans out to for people that don't have high enough credit scores for us. That number, I'm so excited to see. Really, what's going to hold up the stock is personal loans, Galileo, and that's pretty much going to be it.
Yeah, hopefully some guidance as well on what their expectations are with the student loan refinancing coming back. Maybe that might be a Q4 thing for their renewed 2023 guidance. Hopefully we get some word out of that for Noto. And then obviously the wild cards are going to be buy now, pay later or options trading or something like that from a catalyst perspective. But the 2 big pillars are going to be the loans segment, which is a really macro thing in terms of what does the environment look like from a lending rate perspective, and then the credit card segment from a macro perspective as well. And so there's 2 layers really that I'm looking for SoFi. Obviously, number 1, looking for the company to beat, show me a distinction on the macro, if they're relatively strong or not. And then the second layer is SoFi compared to competitors like Lending Club and others to see the relative strength that it might have or not have over a competitor, right? So there's the macro layer, which is economy sucks, therefore everybody's going to get hurt. And then there's a second layer to say, okay, economy sucks. That's our baseline. How much more or how much less is SoFi going to get hurt than their competitors?
So let's get into Galileo's B2B opportunity and this $200 trillion market.
This is the $200 trillion market. This is straight from Galileo's website. Today, 50% of B2B payments still happen by check, which means that there's a $200 trillion opportunity for digital B2B payments over the next decade.
50% of those things that happen globally is I write you a check for that software.
Paper check, baby. That's it. Yeah, exactly.
Wow, I did not know that.
Not only for software, that's like business, like just paying for utility bills, all like transactions across the board over businesses, even like mom and pop shops. Mostly, I would think, is the small businesses.
Embedded finance is going to be a big part of this. And virtual cards is going to be a big part of this as well. Visa is even trying to push this incredibly hard, but we play a very big line in that chain. So what does that actually translate into revenue for our company? We are not going to be the next biggest company in the world. For example, last year, we processed $54 billion. Whenever Galileo actually was acquired by SoFi, There was no B2B market. This was not a market that Galileo was ever going after. This is only since we actually had a bank charter. So now that we have a bank charter, we can actually go after this new total addressable market that should change the total valuation of this company in general. Galileo and Technisys were purchased for about 1.2 billion and 1.1 billion respectively. But now with these two companies, now we can offer a service that both of them can come to market together.
One thing about Galileo is they're actually working on gig economy payments, replacing checks, but also as new businesses like Uber present themselves where they need to pay people on a daily basis for so-and-so hours worked. The former CEO of Galileo, Clay Wilkes, he was in an interview, he was talking about how do you pay a welder per weld that he does instead of like doing an hourly rate, because then they just waste their time. He wants to incentivize his workers. And I think Galileo is actually dabbling a little bit into that.
I sort of want to play devil's advocate here a little bit. 200 trillion is a massive number. I'm just not sure the feasibility of that amount, because that's taking into account entire industries, enterprise, small merchant businesses, mom and pop shops, like everything. That is the same argument that Bitcoin might use to say, well, if we use 10% of all of the global transactions, we'd be at whatever $1 million per Bitcoin. There's a whole bunch of, number one, execution risk baked into that. But number two, it's really wishful thinking. And it's something that if 1% of the 200 trillion is captured by SoFi, they're like one of the world's biggest financial institutions.
Like I said, last year we processed like $54 billion. I'm sure Stripe is doing way more than 2 trillion.
SoFi would get a fee from all processed dollars.
Yeah, that would probably be somewhere in the billions of revenue.
Once you actually boil it down to what is actually feasible minus competitors, and then what is the fee that SoFi actually gets from that, yes, you'll have orders of magnitude on top of where we are today. 200 trillion is like a massive number for people to mentally digest. It's really good that we put into context in terms of, okay, what does this actually mean for SoFi? Because it's a percentage on a percentage, basically.
I say 200 trillion as a total addressable market, not that we're going to capture it all, or even that it's all going to go to digital payments. Maybe half of that goes to digital payments and then it gets split amongst the top 10 players. I think what's really important is that we're a business that's going after a insanely fast growing market, and that should only grow into the future. And then even these things that continue to put pressure on our dollar, like inflation, will even help our business going forward.
SoFi introduced a new product this week called Cyberbank. Cyberbank Digital seamlessly integrates with payments and digital banking services to support customers in novel ways that dramatically improve the customer experience. Cyberbank is a digital, robust, end-to-end solution that empowers financial institutions and fintechs to create and deliver exceptional digital-first tailored customer journeys with the option to integrate conversational AI capabilities across all devices and apps.
All of this kind of existed before this announcement. This was kind of Technisys top-end product that they were offering. However, this is like the first time we've ever seen it ever even mentioned with the name Galileo ever. This just goes to show that we're doing this, we're building that banking core. It's like the first kind of real news that we've actually had publicly about them actually working together. There's two parts of Technisys. There's the back-end stuff that none of the consumers actually see, which is all the software that goes to run all the financial services you use with banks and all these different types of fintech companies. And then there's the top end that Technisys gives, which is like a really easy way to like make a banking experience on your phone, on a website, and it's like a tool that you can give to another company that they can use to build their own financial products.
Conversational AI, not a lot of people are talking about. They don't actually use this word, but what they're talking about is Kona.
Is that the company that they bought for this tech?
Technisys bought this company, Kona. Conversational AI as one of their selling features, as well as knowledge-based AI, and then know your client and anti-money laundering AI as well. So it's all financial services, chatbots to help with these services. Being SoFi, we own Technisys, we also own Kona. So what they also talk about is having a third-party marketplace for Technisys. There are other companies that will make apps that you can purchase through Technisys, like DocuSign, like Dropbox. You can end up adding that to your service as a financial institution. Not only do you have the base layer tools that Technisys is offering you, but then you also have all these additional third-party apps and services. So this is all built in, configure, reconfigure, and offer new financial products and services in minutes, not months.
So this is for like fintech startups to be able to use this as their API.
So it's like B to B to C. A lot of consumers don't know what AWS is because the only people that use it are the ones that are providing services to the consumer.
So this is introducing Cyberbank from Technisys.
Cyberbank enables you to rapidly adapt to changing consumer behaviors and win with digital banking experiences that help you differentiate. Whether your business is retail, SME, corporate, or payments, Cyberbank can help kickstart your digital banking project in as little as 3 months. The platform is API-centric and has a microservices-based architecture, which means you get the structure you need and the flexibility you want. Cyberbank can be implemented as an end-to-end platform, enabling you to innovate from product definitions to customer engagement. You can also implement Cyberbank Core as a standalone solution, giving you the freedom to adapt the platform to your unique business needs. With Cyberbank Core, you can define new products and services based on a powerful combination of pre-built atomic services with ready-to-use definitions. And for banks looking to create a digital ecosystem and build exceptional customer experiences, there's Cyberbank Digital. The CX framework enables you to build responsive web experiences and mobile applications and deliver conversational banking. And staying compliant with regulations is easier with Cyberbank, so you can spend more time innovating.
Basically, at a high level, what this is talking about is that flexibility in terms of the tech platform that's enabled from Cyberbank. That customization is all the way from the front of the stack to the back of the stack. You have a user experience or the UI, the user interface, i.e. what you see on the actual app, that's customizable. You can very easily reskin that differently. It's all user-centric, so focused on that user. But then the more important part is it's API-centric and it's microservices-based. So what does that mean? Well, there's basically two ways that you can organize data. This is going into tech now, but super high level, guys. Basically, there's a monolith structure, which everything is meshed into one gigantic structure. And it's very difficult for it to be flexible if it's like that. So a lot of traditional legacy tech infrastructures are monoliths. That means that you cannot customize them. You're not very flexible with them. And so what happened was, as companies started to see the need for scale, they moved to a microservices approach. And basically what microservices is, it breaks out that giant structure into smaller bite-sized isolated components or modules. We're on YouTube right now. Let's say the video function is an isolated module. Let's say the chat function is an isolated module. The search function is a module. The profile page is a module. In a monolithic structure, if one of these things gets overrun with traffic, the entire site goes down. But in a microservices approach, if let's say the chat gets overrun with bots, you can allocate more data or more space or more resources to just that one function so that the site does not go down. And so all of a sudden, you're way more flexible. And so coming back to Cyberbank, in the context, an API-centric microservice approach just means that it's very flexible and it's out of the box. So this is like, you're basically just playing Legos.
I got a question.
Building your own bank.
So when we think about like old banks and how their software is built and how Technisys is trying to build like the new bank, you're saying it's the microservices that you would plug into the old bank aren't as efficient as how it would be for like Technisys.
A lot of old banks, they're monolithic structures. And so what happens is they'll crash very easily if they get a surge of volume. So for example, in Canada, they had, when COVID hit, the government websites started crashing when they started offering like checks to people because everything is tied together. And so you'll get the volume that's isolated to one function of that website, entire thing comes down. So there's two ways you can fix it. Is you can do a platform migration. So you start breaking down that gigantic structure and you start building isolated modules or components. That takes a long time. Or you can go through the API route, which is what Galileo is offering, or Technisys is offering, where you can basically just do a request and you can go onto Technisys's tech solution, right? So when that request from the user comes in, it's going out again to Technisys. And so you're augmenting it, essentially not using it at all, which is much faster. Essentially, Technisys is like a Swiss Army knife for a lot of the traditional banks. Like whatever problem you have, they have these modules that are all built in out of the box that you can just plug in and then it'll work because Technisys has that back-end infrastructure. You don't have to rely on the bank's legacy platforms anymore. And so this is where this idea of a cyber bank comes into play, right?
This is really interesting.
I honestly think it's going to be their new product. They're not going to offer anything but this. Obviously, they're going to have, they have really two products, but Galileo is going to be an integral part of Technisys going forward. I don't think they're going to offer it without it. Personally, if we're going to get a little conspiratorial here, make it a little fun, I think they've already been selling this product. Vlad Tenis.
Yeah, Robinhood dude.
He was already coming out saying that, they found a new partner to bring their infrastructure cloud native. And it was right at around the time whenever we acquired Technisys. And then after this, I think they sort of gave us a little bit of insight, or maybe they'll say it on the earnings call that T. Rowe Price was the first people to use this This was only 3 days before they announced this new product. I'm sure they were offering it as a service. If not, Robinhood was the first people a couple months ago. I would bet a lot of money to say that they are one of the first users of this new Technisys Galileo Together product. T. Rowe Price manages $1.7 trillion of assets under management. On Galileo's website, they say that all of their clients put together have about a combined valuation of $150 billion. We're running with a bunch of small fish. We don't have a large institution that whenever we look at T. Rowe Price, for example, that's a $25 billion company right there. That's a 16% increase in our client base, let's say. I mean, obviously, It's not a one-to-one ratio, but I like to look at that metric just to show if we are going to go off combined valuations, we're doing pretty well.
Whenever Galileo and Technisys release a PR, it's basically a SoFi PR as well.
Galileo is a separate entity. Like Galileo has their own CEO, they have their own C-suite, they have their own management team, and SoFi is a client to Galileo, just as they are the eventual owners. And so the only time you really see Galileo's numbers is when SoFi reports quarterly earnings, like we're going to see them on Tuesday. But Galileo operates as a standalone for the most part in terms of their decision-making process.
Twitter, Elon Musk has officially purchased it. Anthony Noto used to be the COO of Twitter. The CEO, Parag Agrawal, walked away with about $60 million. Anthony Noto, do you think he would be proud of someone like Elon running the company, or he wouldn't like it?
I think Noto and Elon would be on the same page, given the entire mission of what Elon is trying to achieve with the Twitter thing. He wants to integrate payments, like his whole PayPal background. He wants to integrate shopping. Like he wants to make this like the everything app closer to WeChat, where people can do many, many things onto Twitter. Twitter very soon is going to become our actual real competitor to Meta in terms of eyeballs on page or market share that they're stealing. They're going to become a competitor to YouTube because he wants to reward content creators. But where I say that they're aligned with Noto is this aggregation of different services to create an all-in-one platform, because surprise, surprise, that's exactly what SoFi is, except it's for financial services products. SoFi has the lending side. SoFi has the B2B aspect. SoFi has the financial services aspects with their credit cards, crypto. You're going to have options trading very soon. They have margin trading. This entire mantra or this top level sort of thesis of having a user use one app instead of using 5 apps for all of their financial services needs, whether it is to check their car loan, their mortgage, or their crypto account. I think that meshes very well with the entire goal of what Elon is trying to do with Twitter with regards to having one app where users can access many parts of their life. To some extent, I think this has been validated by the market. The market has been moving more towards this aggregation.
One thing I want to add to what Tevis said real quick is around 7 to 8 months ago, there's a person on Reddit called Bender9000, and he went through like the text code after an update and found out that SoFi, their team was actually experimenting with adding tweets into the app built in. So like you would go to a stock and you would see popular tweets about the stock, or you go through your banking application and underneath there'd be like a Rolodex of tweets you can go through based on like your linked Twitter. But there is actual code in the SoFi app right now that suggests that there's going to be some sort of Twitter integration in the future, which is kind of cool, because if that were to happen, it's just one step closer to make maybe one day doing something.
SoFi Hong Kong basically has a similar offering where it's that content creation plus that financial investing aspect or that group investing, similar to what StockTwits is or public.com, right?
A social side.
Exactly. We can see natural synergies there. So if they do,
so Twitter is buying SoFi. That's your argument.
Hey, man, I think Elon has enough money to buy SoFi if he wanted to.
Someone was like, hey, why do I tweet my links to YouTube videos? Why can't I just put them on Twitter?
A lot of it, just in my opinion, is going to be built on the backs of that creator economy. If Elon, number one, starts creating longer form tweets, if he starts to promote actual, let's say I want to make a YouTube video and instead of posting it on YouTube, I get a better split as a creator on Twitter, then I'm more incentivized to start bringing in people. That flywheel starts rolling in terms of eyeballs. And all of a sudden, Twitter becomes this place where people flock to. And so I really think that for Twitter as a social media company, the secret sauce of their growth is really the incentivization of creators. And I think that's where he's going to focus on first. Integrating payments, integrating shopping. What is at the heart of all of that? Creators creating content.
Yep.
As you create content, you have this influencer status, and you can do shopping, similar to what YouTube has with shops. Payments, link out to a Patreon, link out to a link tree, whatever you have it. So I really do think that creators are at the heart of this move.
One thing on the docket was Anthony Noto's salary.
I'll loop the two in. So let's just look at Twitter and his salary at the same time, because some people think Noto's making
interesting
bank. So the SoFi followers will know that he buys a lot of shares of SoFi. Lately, though, this has really gone back. Not been buying a lot of shares. And people go, oh, well, he's made $100 million in stock options. Yeah, but there's SoFi stock option. He's not selling SoFi to buy SoFi. I mean, the same year that he made $100 million, Vlad Tenev of a company almost the same size as us for Robinhood, he made like $800 million. So this is just this state that we're in, okay? Anthony Noto, his real salary is about $1.4 million a year. That's before tax. But now that Elon Musk has actually bought Twitter, Anthony Noto used to be the COO, he's going to end up getting paid out $125 million. So he's going to have $125 million of liquid assets because that's the price that Elon Musk bought it out, was like $54.20.
Basically, Anthony Noto is going to be loading up the fucking wagon on SoFi stock soon.
Maybe, potentially.
Okay, last thing let's talk about is options from SoFi. Leaked image. Looks like we're getting options. Riley, what do you think?
Like I said earlier, Binger9000, he's on Reddit. He goes through the text and he found a lot of like options code. Like this is suggesting that options is closer than we think. Robinhood in the early days had a lot of problems with fraud when it came to options. A lot of people doing some sketchy stuff. SoFi, it looks as though they're about to release this. This is some sort of screenshot. Yeah, it looks really close.
If you just think of this from like, okay, let's logic from reason. At what step of the process would this agreement be drafted up? And I would imagine it's towards the end of the process, right? Or would you guys think it's towards? Because if it's towards the end of the process, then the mere fact that this thing exists would mean that we're coming up to a close on options being released.
Just in the sheer fact that they even wrote that out, I think means that they already have the connections in place. That has actually got me excited, because whoever they're leaking that out to, it could be beta testers, it could be probably closer than we think, but it's also about to be November, guys. So like, I don't know if it is going to be end of year.
Now, options on the app would absolutely be huge. And also if they can fix the lag on the app, that would be nice.
The reason why Zelle is not using SoFi is that we have some really weird account numbers.
Zelle is basically a PayPal competitor?
No, so basically all the old banks said, hey, all these little fintech companies are trying to like, you know, be our like transportation vehicle for payments. Let's all just make one together. So all the big banks in America decided to make Zelle, and they built it all into their app, spent a lot of money on it. So now you don't have to get PayPal, or you don't have to go to Cash App.
It's pretty seamless. It works well.
It works well. Here's the thing though, like about a year ago, somebody contacted Zelle, and Zelle sent them an email about why they couldn't integrate with SoFi just yet. Thing was like transaction IDs. And this is before they were a bank. So like they were moving into a bank, and they promised that you would keep your account number, which was true. But account numbers and transaction IDs, like it's too weird to integrate. So whenever we get this below the glass figured out, which we don't even know because they're not going to tell us, then we're going to have Zelle. And that's going to be another big factor that people are going to love SoFi.
If we are redoing our entire core and everything and just rebuilding the infrastructure, I'm sure we get that fixed. The way it works also, if I'm going to just touch on Technisys as well, is that it's going to make one multi-product core, which will allow for deposit and checkings, which right now for SoFi, deposit and checkings is one core. Okay. And by core, I mean, we are dealing with a partner. We have one for deposit and checking. We have one for lending. We've got one for credit cards. And then we have one for the investing brokerage back. That's a lot of different players. And it's also probably a lot more information than just going from one seamless partner. That probably works a lot faster.
With regards to the cores, I think the sum of the whole is more than all the parts because of the integrations that they can do. The more cores that essentially that they bring in-house, the more of these little acquisitions they have over the years, then the aggregate result or byproduct is going to be so much better. Tuesday morning is earnings. I don't know that we will be here for earnings.
We'll stream whenever Noto starts speaking. I don't know when he starts talking, so I'll find the time. Maybe it's 8:30. I don't know.
Regardless, we'll be talking about it next Friday. That's for damn sure.
But yeah, Tuesday's earnings. Don't miss out.
Thank you, everybody. See you on Tuesday, this channel for earnings, and next week.